I will call the meeting to order at 6 o'clock. And just a reminder, this is a special meeting, so because we had originally scheduled this for tomorrow, and so we cannot deviate from our agenda. So with that in mind, the first item on the agenda is the opportunity for public comment. I don't see anybody on Zoom. No one in the room. Okay, so I will declare public comment closed. The next item is staff reports. Sherry and Ryan.
Yep, I just have one thing I included for your information. It's in the packet. It's just a preliminary agenda schedule for 2023. I always used to give this out at the beginning of the year, so we had some idea when things were coming along. So this is the schedule for 2023. It's not set in stone, and we can certainly add to it, but just typically where these things fall.
Great. So the next item on our agenda then is approval of minutes from our January 9th meeting. Is there a motion to approve the minutes? By Terry, is there a second?
I'll
Seconded by
second.
Al. Is there any discussion, additions, corrections? Seeing none, all in favor, raise your hand. Minutes have passed. We don't have any old business tonight, so we will move along to new business. And the first item of new business is our financial statements dated December 31st. So Sherry, why don't you walk us through the financial statements and
Okay.
ask questions.
Okay, so I'll start with the overview. Tax collections basically on par with last year. It's been remained fairly stable through all of this time, and including all of COVID, so which has been great. In fact, collections in motor vehicles are identical to last year at 92%. Licenses and permits, conveyance taxes received are 77% of the annual budget. Those are hard to project, but we're usually pretty consistent with where we are, that we collect at least this much. Building permits received are at 317,000 already this year. And I just found out from Mike Minto that we received another 150,000 last week. So we are well ahead of the schedule for that particular revenue. Housing code permits 108,000 or 61% of the budget. So running a little bit ahead there. State support for education and state support for general government, both anticipated to receive according to budget. And we have received some payments already on both. Charge for services, primarily fixed by contract. We normally receive those. Fines and forfeitures, what we've received so far are in line with budget to date. And that is not a significant source of revenue, so there's not too much concern there. Miscellaneous, we're finally starting to see the interest income come back a little bit. Through December, we've received 609,000 as compared to 15,000 for the same period last year. The average stiff interest rate for July through December was 2.92 as compared to 0.1% in the past. On the expenditure side, I'm not seeing on the town general fund budget, not seeing any budgetary concerns at this time. The daycare fund ended the period with expenditures exceeding revenues by 23,000. Not too big a concern there. It's typically a timing issue with some of the posting of their state revenues. Cafeteria fund, expenditures exceeding revenues by 140,000. We still have a significant amount of state revenues to be received for the early part of the year. They also, as you can see, the fund balance started out the year at 380,000. That's a very good fund balance. In fact, we can't really exceed much more than that due to regulations on what that fund balance can be. We can only maintain 3 months worth of fund balance there, 3 months worth of expenditures there, or we risk losing our state aid for lunches.
So is the problem that kids are getting free lunches, but the money from the state hasn't come in? So we're going-
Correct.
Okay.
Yep. The rec program expenditures exceeded revenues by 44,000. Fund balance decreased. We already were in the deficit position of about 63,000. We're now in a deficit of 108,000. So we'll need to watch that as we move through the balance of the year. Capital non-recurring, no change in the estimates here at this time. As you know, monies don't go out of that fund unless the council approves it. We started with a fund balance of 5.3 million at the beginning of the year. Proceeding with the budget as adopted, we projected ending the fiscal year with a fund balance of 943,000. And that's largely due to the ARPA money being included there. Question?
Yeah, where does that fund balance usually end? You said it was 943,000. Where were we last year with that? How's it compare year over year?
Well, last year it was high because of the receipt of the ARPA money and that going into CNR. Typically, that fund does not remain that high. And you'll see that that will, as we move through the year, those funds are, it's just typically a holding place for capital items and non-recurring items. So we've moved ARPA out of there. Normally, we would not see a $940,000 balance in there. A couple $100,000 would be recommended, my recommendation at least, just in case there are something unusual that comes up. But we've been down typically in that fund to maybe 50, 60,000. So, you know, it's kind of, it won't remain here. That money's will be going out for the ARPA projects.
I have a question. If Brian's all set. Are you all set, Brian?
Yes, on that one.
This is just me asking clarification because I still get confused by accounting communication. It says for the recreation program fund, it says fund balance at July 1st, 2022 decreased, and then from 63,000 to 644 in parentheses. Are you saying that it generally?
Those are deficits?
Yeah, that's,
Yes.
yeah,
The
right,
deficit.
Yes.
yes. That's what-
Yep.
So in fact, the deficit increased. It's
Right.
not really that the balance.
Right.
Right.
Town aid road fund revenues exceeded expenditures by 65,998 for the period. Fund balance therefore increased from 121,000 to 187,580. Per the state's budget, our grant is 412,260. We have received the first payment and expect to receive the balance of that. That fund is used for snow removal costs, and so far we haven't had a lot of snow, so we're very thankful for that. Debt service fund, it has increased for the period because all of our principal payments fall later in the year. So principal payments you particularly pay once a year. I think they're June payments this time around with these last issues were June payments. So principal is paid once a year. That's when the big payments will go out. And interest is paid twice a year. Moving on to the enterprise fund, the solid waste fund. Revenues exceeded expenditures by 280,000. This balance will be drawn down as is expenses are met throughout the year. We typically run pretty close to budget on this, so we should be all set there. Health insurance fund, Expenditures, and I'll refer back to the health insurance fund pages just to show you this a little bit, but expenditures exceeded revenues by $29,000. Fund balance decreased from 4.3 million to 4.283. Claims through December averaged 650,000 for the month as compared to 640, the average for last year. I do want to refer you to the revenue and expenditure statement for the health insurance fund. I'm not sure what page it is in the council packet, but 28 for me, so,
Yeah, I have.
okay.
Um,
In the finance committee, it had a page 28, but
So I guess, let's see.
probably not quite halfway through the packet. But if you look at the health insurance fund comparative statement of 44. Thank you. I just want you to see how we're running for the year and why and how it compares to budget, because we did budget a drawdown of this fund of $552,000. And so far, we've only drawn down 29,000. Last year, our claims were up 18%. So when we got our new rates, we said that's a pretty big increase. So we don't want to increase our rates when we have that much of a fund balance. So we had budgeted to draw down our fund balance, but so far this year, our claims are only up 1.6%, which is a good thing, really good thing. So we're not drawing that fund balance down as quickly as we thought we would. So I just wanted to point that out to you, that we are still budgeting to try to keep this fund with a reasonable fund balance, something that's responsible, but not overly funded. But when the claims fluctuate that much, we don't really have a lot of control over what happens with the fund balance.
Brian, you have a question?
Yeah, I'd like to go back to interest revenue. I think you said last year was 15,000, and did I hear you correctly saying this year is 609,000?
Yes.
Okay.
Two things.
What are we gonna do with that money?
Interest income goes directly into the general fund. So if we exceed budget for that, it would roll into fund balance unless the town council appropriates it out.
And that jump is primarily because we've been sitting with most of the ARPA money in the bank,
Yes.
collecting interest, or.
Two things. The interest rate is 2.9% versus 0.1%. And yes, our principal balances are much higher than they were in the year past. The other thing that's helped is that with the school building project, we've been getting pretty regular state reimbursements. So that helps us to maintain our cash balances. So our cash balances are definitely higher than they were last year.
Okay.
Okay.
Thank you.
Okay. Any questions on the health insurance fund? Okay. Workers' comp expenditures exceeded revenues by 92,000 for quarter end, but again, that's just a timing of payments out of that fund. We're pretty much running according to budget. Management services expenditures exceeded revenues by 89,000. Fund balance decreased slightly from 2.4 million to 2.3 million. Just as a little bit of a refresher, the management services fund includes the copier maintenance. It's a shared fund between the town, the board, and the region. We manage the copier fleet through this account, shared IT services, shared finance services, and the other real big one in there is the energy account. So I do expect that this fund will be drawn down as the year moves on, as we pay out our energy bills. Transit services is ended the period with revenues exceeding expenditures by 13,000. Operations are proceeding according to budget for the Transportation Center and WRTD. That's really the only activity in that fund at this time. Cemetery fund retained earnings increased from 228,813 to 231. Major costs for this are mowing and cemetery maintenance. Eastern Highland statements are included in here for your information. As same as the Mansfield Downtown Partnership, but we do include them for your information. Eastern Highlands running according to budget, expenditures exceeding revenues by 31,000. Fund balance decreased a little bit. And most of the times when we're off by just that little bit, it's timing of revenues. Downtown Partnership revenues exceeded expenditures by 74,000. Fund balance increased from 355 to 430. Part of that is partly due to UConn typically pays their contribution all in one lump sum at the beginning of the year. We make our payments on a quarterly basis. Other than that, I don't have anything to particularly highlight. Any concerns? We're pretty much on target with budget and where we should be.
Great. Are there other questions on the financial statements? Al?
I found this on the web.
Yeah, I just got a couple here. On the cafeteria fund, it was mentioned, I believe, that the state owes some money. We're expecting to get some money from the state. Is that a correct statement?
Yes. Yes.
Okay. If I was to look at the balance sheet, though, it looks like there's a negative accounts receivable. I would expect there to be, a positive figure in the, if we're owed money, that's a receivable. I'm trying to figure out
Correct.
how.
You're right. I love having an accountant on the committee. Yes, you know what has happened is there was a receivable at the end of the year.
Okay,
Would have gotten reversed. So
okay,
let me pull the detail, but if that reversed it, that would have reduced it. They reversed the journal entry. So yeah, let me check the detail on that, but I'm sure that's just a combination of those two entries.
Can I ask
Okay.
And
Can I
we
ask
actually, you know what I can tell you exactly what it is. We don't book a receivable every month or every quarter for these types of funds. So we reversed the receivable entry from year end, but we didn't book a quarterly receivable entry. Most of the time for these funds, we only do that at the end of the year. We book receivables. So we're not on a full accrual basis, and that's what you're seeing the effect of that. Just refreshing my memory.
yeah, it's just a little, I understand what you're saying. It's just a little misleading to the reader who
Yeah.
looks at that as basically a payable. And,
It is, yes.
but you're saying that, yeah, okay.
It's just not
All
booked.
right, and my other okay. My other question has to do with management service.
Yep.
I'm, as an accountant, I'm not really content with a miscellaneous expense being like 50,000. What's in that miscellaneous expense for 50,000 or so?
Okay, let me pull a detail for you because that can be one of several accounts. So it could be out of,
Yeah,
it could be out of any one of them. So I don't want to answer off the top of my head and give you a wrong answer. It could be in energy, it could be in IT services. I know it's not in finance because I know it's my accounts. Copier maintenance. Let me check and see where that is and what that is for you, because it does exceed
Okay.
budget. So I want to get the right answer for you.
yeah. Yeah, it almost seems like maybe we should be breaking that out into a couple of accounts or something like that. It's just a high number, I think, for miscellaneous, but
Something in there
anyway, that's it.
wasn't budgeted, so let me get that for you.
Can I
Okay,
ask
thank
about
you.
the cafeteria fund? So we've had this sort of disjointed state policy that is now, for now, going to cover us for the for free lunches for all students until the end of the year. I recall during the beginning of the pandemic, perhaps when this was being directly federally funded, there were some issues with the federal funding not covering the totality of the expense. Has that been resolved? Are we assuming that this is a state policy that they continue into the future, which it seems likely that it will be, or at least possible? Are our costs being met by the state's contribution in the same way that they would have been met with the pool of full pay students that we used to have and the pool of free and reduced lunch students that we used to have?
I believe so. I have a meeting scheduled with the food services director to follow up on that issue, but I believe so. I know one of the other issues we have is that per state guidelines, we're not charging enough for our meals. So we're keeping an eye on that as well, and we may need to increase prices for that. But we've been filing for the cost of our school lunches regularly and consistently. So I can certainly get a breakdown of what the receivable is for that, or I anticipate we'll receive what we have applied for.
Okay, and then my second question on that is, there's been a short gap between when the state funding, the first bit of state funding ran out and the state reauthorized the funding through the end of the fiscal year last week. I, among probably other parents, made a deposit to my kid's account because we were told funds ran out, and I think he bought one lunch with it before the state passed the thing. And so do you have a sense of how much we received directly from parents over the sort of January month that is now, especially if the state funds this program in perpetuity? I would imagine we could eliminate this fund and just take the state money and pay for the program with it. There's no reason to have a fund to pay for the cafeteria once it's fully funded by the state. So those dollars do you have a sense of how much is sitting in that account that's money that parents paid in for lunches at one time or another that could theoretically never be spent on their kids' lunch?
Right. I do not off the top of my head, but I can certainly find out. And like I say, I have a meeting scheduled with the director in the next week. So I will ask that question, but we do track that within the system. So if at some point in time it's determined that those funds are not needed, there will certainly be a communication that goes out. So I will follow up on that as well.
Yeah, it might be something just to, if this is a fund that we have a role in as the council or whatever, it might, if in fact state ends up as a policy decision paying for this forever, not just for this year, and there's $100,000 or some amount of money that parents have paid in, and it might be quite expensive for the town to refund parents' credit cards for $25 en masse, it might make sense for us to come up with something to do with those funds that would support the mission of the schools or something along those lines that might be a better use of everybody's time and energy than, sending everybody a check for $11 or something like that.
Yeah. Yes, and I'm sure since that is an education program, I would think that the Board of Ed also would want to weigh in on that.
Yeah.
But certainly I'll find out.
EO's
Okay.
money too, unfortunately.
Yes, EO Smith funds are in there as well because the program supports both school districts.
Right.
Yep.
Does the
Okay.
state program support kindergarten through 12th grade?
Yes.
Program?
Are there other questions about financials, Brian?
Yeah, on the cafeteria fund. Why is that on the town side and not on the Board of Education side?
It's a town fund because that's the way we have to account for it. The Board of Education has a general fund only. This is a special revenue fund and towns have special revenue funds. The Board of Education is technically a department within the town with its own governing body. It's a little bit confusing.
Part of the reason why they don't have their own capital budget. The
Correct.
Board of Ed's capital improvement plan, Brian, funding for capital upgrades to, for the Board of Ed is housed in the town's capital budget that the town council adopts every year.
So we
And
manage special
I have-
revenue funds for
I have another question.
a number of entities. Yes, go ahead.
Page 22 of the final financial statements. Cash dispersing People's Bank. There's a negative balance there of 14,395,508. Could you explain why that's so much in the red?
So Brian, you said page 22, but I don't think that number corresponds to the marked page 22 in the, so is it 22 in the council packet?
It's like 50.
No, it's, yeah, it's actually in the town council packet. Sorry.
Oh,
Looking at this
okay.
stuff.
Yeah.
Can you give me a finance page number whenever you find it, Sherry?
Yes.
It's around 50, I think.
Okay, you're looking at the general fund trial balance? Is that
Yeah,
what? Oh.
cash dispersing from People's Bank.
Yes, okay.
Online.
page 7.
Oh, other direction.
Okay, thanks. I got it.
Yep. So we have a pooled cash, so how can so I just want to make sure I'm clear so that it's not, it is going to be confusing. The dispersing account, we maintain a limited balance in the dispersing account, and all of our funds are maintained mostly in the state treasurer's investment fund. When we need the funds, we draw them down out of, you'll see, Stiff has, okay, so if you look at 3 lines down, 10364 is cash Stiff pool, and that is $38 million. So what happens is at the end of the month, we run checks, we do all our disbursements, but the dispersing account doesn't get funded by Stiff until we actually need the money. So the checks are recorded as of the end of the month, but the money is still in Stiff until those disbursements go out. So again, it's another timing issue, and because we manage so many funds and so many accounts, we're not required to do a full accrual basis or full cash basis. So if I were to pull up the cash balance in the actual bank account balance, it would not show negative $14 million. We would have money in the bank. It's
Okay.
what you're
That-
seeing.
It is a bit confusing.
It is. We are seeing the effect of the outstanding checks.
Okay, and there's quite a few with negative balances here. Is it the same on all the other negative balances? You got one down here for accrued payroll, which is 656,927. Page 23 of the council packet.
Accrued payroll, so that's a liability. Yes, that's basically the same thing as we have payroll going out that we just hadn't funded yet.
Okay. And actual revenues probably is just revenues that you haven't collected. Is that what that $41 million figure is?
41 million.
Page 23.
Did you say actual revenues?
Yeah, actual revenues,
41,
41 million, I think it says, right?
that is actual revenue. So that is a revenue is a credit in the accounting system. So that's the money that has come in.
Okay. Well,
Expenditure,
that, it's in parentheses, that confused me.
I know it's an accounting thing, right, Al?
Yeah, okay. I'm new at this, so.
Yeah, I mean, we added this schedule some time ago, I think for Betty at one point, because we used to just include the balance sheet. And it was a little clearer because everything was lumped together and you didn't see the debits and credits like you do in the trial balance. So if you want to see the net numbers, all positives, where they belong, look at the balance sheet, which is the page before that. It's a
Okay.
little easier, it's a little clearer.
Okay, thank you.
Any other questions on the financials? All right, if not, I will entertain a motion to recommend their approval to the town council.
So moved.
Moved by Terry, is there a second? Seconded by Al. Any discussion? All in favor, raise your hand.
Hmm.
Any opposed? Abstentions? All right, it passes. The next item on our agenda is audit services for FY 22-23. I don't think there's paperwork in the packet on this, correct?
No, no paperwork. I just wanted to talk about it a little bit, to put it out there. I know we've talked the last couple of years about going out to bid, doing another RFQ for audit services. It's been some time since we've done that. I've reported on this multiple times over my term here. And I do agree that it's good to do this periodically. GFOA guidance does not insist that we change auditors or even suggest that that's a good thing. If you have a good audit firm that is providing good service and auditing your books, they're fine with that. But they do recommend going out to bid. With that said, my concern is if we do this now for this year, because we have to appoint the auditors every year, regardless of whether we go out to bid, whether we have a 3-year contract. I'll be coming back to you in May, or the new finance director will be coming to you in May, and with a request to appoint the auditors. My concern is going out to bid now, when you have a new finance director that should be coming in and we're short-staffed in the finance office. We have, there are 3 permanent positions that are open at this point. The finance director, the accounting manager, as well as 1 accountant position. To bring a new firm in, and they would typically start their preliminary work in May, sometimes June, when you're just bringing a new finance director on who doesn't know the team, doesn't know the funds, doesn't know the accounts. Would be really hard for that finance director to get started. They'd still be down staff or have staff who's an inexperienced staff. I'm just concerned about what that would do to the department workload wise, to get through that. We're also still wrapping up last year's audit. I've applied for 2 extensions. We were just so far behind. And I'm hoping to at least get the regions done. We got Eastern Highlands done. We may need 1 more extension on the town. And that's carrying us late. And we could have directed more attention to that over the last month, but I knew I could request extensions from the GFOA and OPM for the audit, where I couldn't really get an extension on the budget. So we've been focused this past month and a half on getting the budgets done. So the 2 board budgets are done now. We're going to start to focus really heavy on the town budget. Want to make sure we get that to you on time this year. So the audit is behind, but we'll get it done. I think Brian has a question.
Yeah, OPM, is that the Office of Policy Management on the state level?
Yes.
Okay, and that audit goes to the OPM?
Yes.
Okay,
Yep.
So-
So what I just wanted to bring to you was, I'd really recommend, because I know the question comes up, we haven't been out to bid in a while, and I understand that. And it's your prerogative if you really want us to go out to bid. But it would be an extreme hardship on that office
Does our
if we change
contract
auditors.
allow for a year's extension on this?
Yes, I would approach them to get another year's
But it's not
extension.
in the existing.
No,
No,
no, but we've been their client for a long time. I'm sure they would do something for us.
so I don't have an issue extending it necessarily, especially if we force an RFP and because of all the factors that you laid out, I would imagine our firm would be a bidder and that those factors might sort of influence us to be especially favorable to keeping them rather than switching firms, because we're allowed to and they do a good job. I don't think anybody's got any concerns about the quality of the work that they produce. And so if when we go out to bid, I think it would make sense to do it so that we can just sort of squarely evaluate firms on the merit and price and not base our evaluation on whether it would be good for a new finance director to keep working with someone or not. With that said, however, I think delayed it twice now. We are probably approaching about double the amount of time that the council has set as or that the accounting principles recommend to us or something, wherever that policy decision is made. We've got to be close to double of the amount of time since the last time we went out to bid. I think it's every 3, is it 5 or 3 years, Sherry?
I think it's 5.
And
They say a minimum of 3 because it takes that long, at least 3 years for an audit team to get fully into your books and understand everything and be able to fully audit you. So it's not even worth an audit firm coming on for less than 3 years.
but we've been now, this will be 8.
I would say yes, probably 8.
So it's a long time. I'm just concerned that if we delay another year, we can't give a new finance director sort of 2 more years to get up to speed before a new firm comes in. That's too long, I think, before you go out
Mhm.
to the market.
I think it would be an understood priority for them. They would know, that in the course of their first year that this would be happening.
Brian?
yeah, I don't think Sherry's quite explained why we need all these extensions. What's going on? Do we have enough workforce or? I mean, you're talking a year extension on the audit?
No,
We agreed, the council agreed to extend to file for extensions on this audit 6 months ago or so. Is that right, Sherry?
We actually only filed it, the audits are due to be filed with OPM on December 31st. So we filed for our first extension then through January. We've requested another one for February. So we're 2-3 months behind. And yeah, it goes back to the
Where we
previous
have a
finance
part-
director.
Yeah, well, and we also, as Sherry said, I think her team's doing remarkable work, but we have a part-time finance director right now. We have an accounting manager that's vacant. We have a staff accountant that's vacant. So that's a pretty large component of the team to not have for extra hands right now to shepherd the process along. Or expedite.
We filed for an extension last year too, correct? With Charmaine?
Them, 3 of them.
Yeah.
We're trying.
I don't know if do you need a vote on this, Sherry? I don't,
No, just looking for your support.
okay. Terry and Al, do you have any thoughts? Go ahead, Al.
I got a question. Where do we stand contract wise with our current auditors right now? Are we out of a 3-year? Where do we stand with that?
Yes, we're at the end of the contract, so. Yes, we are definitely at the end of the contract. I
And
don't,
we've
I
extended
think,
it.
I believe she got a 1-year extension on it last year, but just did
Yes.
it for 1 year.
I think that's correct.
So it would end this year,
This year meaning this coming December?
meaning as soon as they finish the audit for 21-22.
Okay.
I think we should follow Sherry's recommendation. It's not that the books are bad, it's just that there'll be an awful lot of training going on, and and the auditors will be in a place of learning as well. And it's a recipe for disaster. It's just trying to make it an easier transition. We don't want to lose another finance director over creating a crisis we don't have to create.
Yeah, I agree with that. I just think we need to. We need to do this after next year's audit and not extend it anymore. I mean, we originally did some extensions to that policy because of the switch to Munis, and then extended it again because we had Charmaine was new, and so I don't know. I think I'm okay with doing it again for this year, especially if the recruitment time frame seems to suggest that sort of end of budget season is when we should expect a new finance director, which is kind of when the next audit team would come back in to start process for next year. So, or a little bit after that. So I get that, but I think we need to have an expectation, no matter how short-staffed the department is, et cetera, that next year is going to be an RFQ process because it's been a long time.
I don't think staff has any objection to that.
Nope.
Al, are you okay with that?
Well, yeah, Ben, I just wanted to say that I agree really with everything you're saying. I do believe, though, that we got to be serious next year. There is the thing about familiarity, and that's a double-edged sword. I know from the accounting world, it's great to go in and know the system and know the client system and all that. But on the other hand, sometimes that can be a bad thing too. You get too familiar, they get too familiar with you. And we definitely should be going out to bid next year. And I would expect that would be a condition that I'm willing to go along with, which is one more year. We go out to bid next year for sure. I'm okay right now, though.
Okay. Is that good, Sherry? Is that good enough?
Yes, yes.
Okay.
That's why we brought it to you, wanted to make sure you were on board, because it is something we have talked about for the last couple of years, and agree it's important and we need to do it. But I also just know what the situation is in that office, and I'm not sure what adding a new audit firm would bring to that situation. It wouldn't be good.
Okay.
Yes, thank you. I appreciate
All
it.
right. All right. Are there any communications or other business or future agenda items? I have one future agenda item just to consider, maybe something broader than the committee, maybe a personnel committee thing too. Just with the continued sort of doubling of how much over the recommended amount we are in the health insurance fund, I wonder if we ought to start considering or exploring options for expending some of those dollars over time to sort of dramatically improve the health insurance that we're offering to employees. Consider buying into the state health insurance plan as municipalities are allowed to. Just something as a potential recruitment tool, being able to offer better health coverage than other municipalities we might be competing with. I know ours is already really good compared to the rest of the marketplace, but it's just a thought. We're now, we've got several $1 million over the fund, and we seem to, even when we have bad years in terms of claims experience, have plenty of money to cover them with the way it's currently structured. So it's just a thought, something to maybe consider, talk to the insurance broker about as a committee. I know it would be complicated and probably expensive, but it's an idea.
It's really something we can discuss. I think as healthy as the balance is, the healthy balance today is, it's not what it was either, so
No, it's
it,
down.
we've been mindful, when kind of the market rate for premiums has been going up as much as it has, trying to stabilize some of that, not pass on all that pain to employees. We've been subsidizing, the insurance, the premium increases. So you're right. I think those were two things are true. We have a very healthy balance in terms of a snapshot in time. I think if you look at it as a trend, I wouldn't, personally say is my impression that we're on a path for, bloating that balance further. I think if anything, we're gonna have to confront some tough realities in the next few years as that balance, which would still be healthy, but that extra surplus goes away.
Over the last couple of years, has that balance been declining or staying stable?
Declining. We've intentionally watched it and tried to draw it down carefully. I have seen fund balance go down as low as $300,000, and it is quite frightening. The minimum balance we should be keeping is a little over 2 million. What we're trying to do is draw the balance down responsibly, but also not drop our rates so much that then when we do have to increase our rates, we see a big jump. Because then it goes way up for our employees as well as for our budgets. And the employee pays a share of it, but the bulk of it is paid by the employer. So if we see a huge rate increase, you're going to see a big budget increase.
Yep.
The rates actually did increase 16% this year because of the big jump that we had in claims over the past year. But we managed that so that we're passing on a slight increase in rates so that we're not falling too far behind the rates. But it's definitely something that takes ongoing management.
All right. Brian?
Yeah, question on the claims. What do you attribute the large jump in claims this year to?
That's just it. We're coming off of COVID. So that is part of it. There were things that were, and this really we can't get into individual claims and that sort of thing, but if we have any high cost claims, if people have, there's fluctuations every year in what the claims are, not to mention what the rates are in health insurance. So rates are typically, at one time, they were looking at medical inflation of 10 and 12%. Now it's really running about 8%, just inflation, medical inflation. So then if you have any claims increases, that's going to increase it even more.
And then after the claims, as the claims go down, will your insurance rate go down as well?
Anthem will project what we need to fund for the upcoming year. That's where we get those rates from. But if we are able to use our fund balance because we have a surplus to hold those rates down a little bit. But they calculate based on our experience and our claims and the enrollment in the plans, because it also depends how many folks you have on single coverage versus married plans and what their claims are. So there's a lot of factors that go into what the rates actually come out to be.
So
The insurance industry was projecting that after coming out of COVID that people had put a lot of medical issues on hold,
hold.
and all of a sudden they were going to be doing them, doing the stuff. But this can't last forever. I mean, in a couple of years, delayed medical care will stop. People will get caught up. And
So
the-
I have to go up to town hall for the meeting, and also this isn't on our agenda for tonight, which is why I suggested it go on our future agenda. So we should discuss it at a future meeting when we can notice the discussion. So there is nothing else on our agenda, and we can't add anything to it today because we're at a special meeting, so I will entertain a motion to adjourn by Terry. Is there a second? Seconded by Al. All in favor? We are adjourned. I will see you all in a few minutes. Have a good night.
Good night.